The biggest unanswered question is, where is the money?
Welcome to Upside, where we dig into the real stories behind the headlines affecting European venture. Joining today is Lomax from Outsized, Andrew from 7%, and myself, I'm Dan from Superseed VC. No Mads today, he's on his way to see the cherry blossoms in Japan, lucky chap. On today's show, well, I don't know how we're going to avoid Liberation Day in the US, pulling it apart, discussing how it will affect Europe, and we will pull that back to startups and investors. We're taking a look at European defense stocks and specifically Germany's spending plans, and looking into the real right now opportunity with AI across Europe. Andrew, what's new with you? You've been a bit of a traveling dude. How's your week been?
I have. I went to Japan and Singapore and South Korea for the first time, all in 5 days. Quite a long trip. What did I learn? Well, America is allegedly the home of great customer service, and I have to say they could learn something from Japan and Korea and Singapore. What a wonderful welcome. Everyone's so polite. Most of the place is so clean. And, UK and Europe, well, we're so far behind on the customer service front. I don't know what to say. So I had a really great trip, met some fantastic people.
Lovely, lovely. Lomax, what's happening?
When you run a venture fund as a GP, sometimes, you're waiting around for a whale to enter the bay. And all hands on deck, load the harpoon. And this happened this week. So Tuesday, met a founder who was closing around this week. So we've been dropped everything to run hard at it, do as much DD as we can in a short time. I'm going to be giving him a call later tonight. So it's been one of those weeks where it's all hands to the pump. You weren't expecting it necessarily. And time is of the essence. So it's been one of those kind of weeks,
So let me get this straight. As far as you're concerned, the founder is a whale that you're harpooning. Is that?
Well, I mean, the analogy, when you put it like that, is not the best one.
Or
but
you,
yes,
Jonah? You're Jonah, maybe. Maybe you're.
I'm
Jonah.
in my oil skins. It's a rowboat, I think, is what it is. Yeah.
We're so going to get lost in analogies. What attracted you to the deal? I don't know what we can give away, but what was the, oh my goodness, we've got to do this? What was the?
Yeah, late seed, bootstrapped by the founders, taken in no money, over $1 million of revenue, seemingly 10x better technology than the state of the art, and
what space?
Big
what does
US.
it do?
Well, I got to be careful about what I can say, but it's in EVs.
Okay.
It's supply chain
nice.
for EVs.
And
it had been identified by a big US player as the leading tech in the world. So we're doing a lot of kicking the tires and various things, but exciting.
And all positive.
All positive, but TBC, whether we get in, whether we do the deal, etc., etc.
And what news has caught your eye this week?
Big news, I think, was the ISAR launch of its first rocket, the first ever rocket on European soil from
Norway,
launch company in Norway. It's a German company. I mean, it's nearly 20 years after the first, SpaceX trial, and clearly this is ISAR, a Munich-based company, that has raised $400 million, had its first launch. The rocket did explode and blow up, but this is all par for the course. As you guys may recall, it took SpaceX 4 attempts to get a rocket into
They expected
orbit,
it, right? From what I can read, they expected it, and this was a measure of success. It got off the launch pad. It just didn't go that far and then flipped over and exploded. But this,
yeah.
It was reported as the first rocket to be launched from the European continent that could reach orbit, but that's not actually true. Those who know their space history will know that in 1971, the United Kingdom launched the Black Arrow, launched the Prospero satellite into orbit in 1971, and then we promptly cancelled our entire space program and handed all the technology over to the European Space Agency, as we're so good at doing. Apart from that, was great news. Launched from Norway, wasn't it? A spaceport in Norway, northern Norway.
Launched from Norway, blew up, but as we say, shouldn't be a problem. Lots of valuable data. One interesting thing is it took these guys $400 million of funding to get to this point. Interesting, SpaceX in 2006, when they had their first launch, it took them $100 million of funding to get there. So 20 years before, with a quarter less money, SpaceX was already in play. So interesting kind of delta there. Normally, Europe is sort of renowned for being more capital efficient, isn't it? But not in this case.
We can't put that down to inflation. I guess 20 years. No, not quite.
No, I think it's the opposite. But I think that there's a number of things that feed into that, including a ready kind of talent base that they had in the US, probably to accelerate things with the funding that they raised.
I caught a couple of things caught my eye this week. So watching Amazon last minute try and buy TikTok, I thought was quite interesting. I know Trump's got his own plans for that. I thought I've been wondering why Bezos has been cozying up to Trump, and maybe if I was a dirty cynic, I'd pose that. The other thing that caught my eye this week was AI models. Now, H&M have bought the rights to 30 models to not take photographs of the models for their campaigns, but to use their digital twins. And it kind of made me think, oh, we're going to bring back Elvis? Are we going to see Tom Cruise still acting in Mission Impossible 97? The Hollywood business model is so broken. Could this rejuvenate it, or would this kill it completely, like streaming broke music? But it was only a matter of time before we saw this kind of proposition where don't have the model, don't have the actor, don't have the singer, but I will sell you the rights to my image or my voice or my moving avatar. And I wonder where we're going to go with this. And I wonder what it's going to mean for music industry, movie industry, and whatever it might be. The other thing that I know, I've met a number of people who are part of the Mansion House Compact crew, BVCA in the UK, which is the kind of the UK Venture Capital Association. And we've talked about this a lot, and looking at how pension capital can be unlocked into private markets, into the UK mainly. But I know that there are many European countries that are looking at smarter ways of using pension capital cash. And that, I think, my sense is there is going to be some actual movement. There is going to be some actual kind of pension cash. The model will be matched. There'll be some way of matching the VC 2 and 20 into the fee structure that pension funds will find palatable. So my sense, I don't know if anyone's got any opinions or thoughts on this, but my sense is that there will be some breakthroughs this year. My bet is there will be some breakthroughs this year with pension cash. Andrew, what do you reckon?
There's a lot of people been talking a lot. I want to see some action. So for sure, we'll see some movement. Will it be enough? Will the money find its way to the right type of investment firms? Or will it all end up in mid-cap
It'll all
PE,
be up top.
or growth sort of venture into de-risked, enterprise software? That's the big problem. Will this money end up in the hands of VCs and general partners who are happy to really go the extra mile and
well, that's where the innovation lives, isn't it? The real innovation happens down in our world,
and the big returns, and the huge returns, right? The huge returns to own some of this technology of the next 10 years.
Yeah,
it's very interesting. I was staggered by there's a very low base, right? So 0.007% of pensions money in the UK is invested in VC. 0.007, right? Compared to the
look
US,
at how much goes into US venture. Look how much UK pension capital through various vehicles. It's like nearly in double digits. It's quite astounding. But sorry, I interrupted. Carry on.
No. So I think under Mansion House Compact they've targeted 5%, right? So they've got to get going by 2030.
Until 2030, 5% by 2030. My sense is that the vehicles they're going to be using, the fund of funds vehicles, or the vehicles that they're going to be using, are going to be more open and mindful of where the money goes, rather than the pension funds themselves being able to be much more risk averse. So that's why I'm a bit more hopeful.
That's got to be the way forward. Like, in Europe now, you have a cohort of emerging fund of funds that actually understand the VC product much better than anyone in Europe has over the years. And I don't think pension funds going out investing directly in GPs is the best idea. And what Andrew said, and we've talked about it on this pod before, is it will end up going to the kind of boring people who aren't really investing in true innovation and are probably more like, what we call AUM, kind of fee generating machines. I think the fund of funds do have the ability to distribute that capital down to the more proactive, entrepreneurial kind of people at the more cutting edge of our industry. So that's got to be the way to go.
I think my sense is that this year these things will unlock. Right. So let's talk a little
TikTok,
bit about.
By the way, isn't TikTok become the ultimate party round? I mean, you've got like A16Z there, you've got Silver Lake, you've got Blackstone, and you can see why this is as you alluded to with Bezos, all these guys hanging out with Trump, and this is now getting probably access to an app that has 170 million users in the US at probably a very nice price. With ByteDance having a gun put to their head by the Trump government. By the way, the deadline is on the 5th of April, so we should find this out literally tomorrow probably. It's the ultimate party round auction that's being run now, right? And then if you factor in the people who've already invested, like Cochu, etc., like you're going to have the kind of who's who all-star cap table of like growth equity and VC firms, right?
I totally get why Amazon's interested. TikTok Shop. I didn't realize what a behemoth TikTok Shop is, and it's only going to get better, worse, depending on your point of view. there's only going to be more throughput.
Yeah.
This kind of shopping, I can't. It's absolute billions. So I can see why Amazon is keen. But I want to move to Germany. I want to talk a little bit about Germany's defense spend and defense stocks in Europe in general. Everything is on the up. Now, a number of defense stocks now trade on forward earnings multiples that exceed those of luxury and tech. So we've got Rheinmetall, Saab, Kongsberg, Gruppen, ASA trade at around 40 times forward earnings multiples. And now, personally, I believe that defense will be the driving force that unlocks and saves Europe from irrelevance. I've also got this conspiracy theory. I was chatting with you guys earlier in the week. I've got a conspiracy theory that the lifting of the German debt ceiling was effectively an incredibly smart move from Scholz to rejuvenate and rescue the German automotive industry. So you have Volkswagen factories now producing tanks, subs, and munitions. My take is that this will be a massive unlock. What do you reckon? Will it be a wider GDP European breakthrough? Will it be this kind of growth hack that we need? If so, where, how, who, when? Lomax, what do you reckon?
Unleashing the fiscal shackles in the biggest economy in the Eurozone is a great thing, right? So I think this is an huge increase in defense spending coupled with, I think, 500 billion that they pledged to spend in infrastructure, right? So it's not just pure defense. So I think this can only be a good thing. I mean, clearly it's pushed up their borrowing costs, but ultimately everyone thinks that this will long-term be an investment in growth and in GDP. I think that's great. I think it's a possibility. Like, I don't think it's a slam dunk. You know, we have to see what the asset allocation is like. We have to see the execution of that. I mean, the last time I went to Berlin, I think how long did it take them to refresh the Berlin airport? 10, 15 years. Like, these things, you know, in Europe can get scuppered by, you know, the issues we talked about here before, like excess regulation. So, you know, like in what we've been talking about in the context of the UK is you can pledge to make all this money and invest in infrastructure, but you need at the same time to be cutting red tape and accelerating that and removing the roadblocks to that. I think when I think about it on a startup level, I see people running around like headless chickens, trying to invest in defense companies or dual use companies in venture. When I see VCs flocking towards things, I worry. Because
it
this
feels
is where,
like, do you remember years ago, everything was a blockchain app? Then everything was an AI app. Now it feels like everything is going to be a dual use or a defense tech.
Yeah, and per your point, like, you know, pivoting Volkswagen factories to defense, it's the same. We're seeing, you know, infrastructure AI companies pivoting to defense or dual use, and you see that across a number of different companies. I think I would worry here because there's sort of you need to take a number of steps. It's like, yes, you increase by tens of billions, if not hundreds of billions, defense spending in Europe and the UK. That ipso facto, to me, does not lead to a big kicker in our world of startups, right? You know, you're selling
not
into
even
governments.
In dual use.
I think it will help, but I don't think it's slam dunk.
Well, I'm just kind of thinking, what is defense? I mean, is energy defense? Is cyber defense? It feels like there is quite a broad bucket underneath defense that I think is going to be extremely meaningful. And if you think about all of the subsidiaries, all of these other businesses that are going to need to get involved in producing whatever it is that might be absolutely whatever they call it nowadays, peace technology. They don't call it war, they call it peace technology. So, Andrew, what do you reckon?
I think a better word is resilience. A part of that is kinetics, you know, so bullets, bombs. Part of that is equipment that's directly related to fighting a battle. But you're absolutely right. It's also cyber. It's also energy. I mean, we still haven't got to the bottom of why Heathrow went dark a couple of weeks back from one substation. But I suspect if you did an analysis of critical infrastructure across Europe and the UK, we'd all be pretty horrified at how weak and fragile some of that stuff is. So it's actually a very large area to look at. And generally, defense spending's, I think, probably a good thing. If it's a rebalancing towards sort of defense and industrial autonomy within Europe, that's got to be a good thing. We discussed before how 80% of the current spending goes outside of Europe. That's kind of crazy when we're industrial nations that can build this stuff and we have the technology to build this stuff. It requires an alignment of ESG policies from investors. And it also, to your point, like Max, it depends where the money goes. If all the money just goes, you know, into the pockets of the existing primes, BAE, Leonardo, TAL, Saab, Rolls-Royce.
Which is what the market has bet, right? You know, those companies are up nearly 200% this year, 150, 200%.
Yeah,
Exactly.
they're up between 70 and 170%. I mean, all defense and all defense ETFs are up
You could argue that they were underpriced before, though.
Yeah,
So
of course.
I would
don't
argue
think
they are.
that's not necessarily a bad thing. But I hope some of the money gets into the innovation, because that's what's going to help us compete globally. That's what's going to be good for the ecosystem as a whole, and obviously the stuff we care about, which is those startup companies. But you want to be not just investing in the capacity to create artillery shells just in case Putin loses his mind even further and invades Europe, but you want to be investing in the next gen technology, because that's what drives growth, drives innovation. That's what has a trickle down effect into the rest of the economy and into other areas of dual use. So generally, I think it's good. Let's see where the money goes.
It could be all the boring stuff, right? And actually, just like, for example, there's a one like big point is, Germany, I think the leading general in Germany came out saying they need to recruit 100,000 more soldiers. He said for that to actually happen, they will need some form of conscription, right? And that will be the same across a number of economies. And I know we all think that warfare is going to be autonomous. I'm sorry, but like in the short term, you're going to need boots on the ground. So that a lot of the money will be going in that. I actually think there's a very interesting article by a friend of ours, Nicola, who runs a dual use fund, and she was saying actually, because a lot of what I've seen in startups is what she calls battlefield tech, which is like these kind of very incremental point solutions, which actually, you would kind of think, if I'm investing in defense now, those are the things that you think might actually be the kind of place to invest. But actually, I think it's a much more boring, the kind of infrastructure of defense that sits behind that, which might include hiring people and, like training people and all this kind of logistical stuff.
This is my point, Lomax. This is my point. It's infrastructure, it's energy, it's recruit, it's operations. It's there. That's why my personal take is we are going to see an absolute reframe of lots of AI companies becoming peace tech or whatever we want to call it. And it's going to be quite a broad, rejuvenating kind of set of scenarios where these startups have a lot more investor interest, because our LPs and LPs, and there's going to this kind of broader push for a focus on defense, which I think is fairly broad and fairly deep.
But I wanted to give one anecdote, right? I heard this week that kind of encapsulates what when we think about it at the startup and investor level, what's happening at the moment, right? So I remember a climate software company 4 years ago during the climate boom raised a pre-seed at, let's say, 5 million. And about 10 minutes later, it raised a seed round at 4 to 5 times the price from a tier 1 VC fund with no change in substance, right? I've just seen the same thing happen with a defense company for no reason, right? Went from kind of pre-seed at 5 to a 50 million seed. And when that stuff happens, I get worried, because I feel people have like slightly lost their minds. So that kind of stuff is happening on the ground in defense at the moment. It is not straightforward. It is a largely B2G sale. I mean, unless you're selling into the prime. So it's a very, very complicated distribution route for a lot of these companies. So I think for tech and startups, there is opportunity. And don't forget that roughly a quarter of defense spending is on R&D. So there is definitely opportunities. But I think, per your point, a lot of it will probably be in the slightly more boring infrastructure side of things.
Well, one of the big advantages for the startup sector, though, is that a lot of this new technology is cheaper. So the primes are used to charging perhaps 2, 3, 4 million for a Storm Shadow cruise missile that we've seen shipped off to Ukraine. The startups, even if they are working with some of the primes to ultimately deliver these, in conjunction with the primes, to deliver these systems to the MOD or Ukraine, they're looking at price points of 15% of that. Substantially lower, and that's driven not just by the fact that some of the startups can create this technology more cheaply, but it's driven by demand from the primary customer today, which is the Ukraine, but also recognition that actually in a world of drones and low cost munitions, that your defense, your interceptors, the countermeasures have to be priced at a point which is you can produce enough of them and which is acceptable to the customer. So every single military, if it wants to be prepared, has to buy this stuff, because they're all looking at Ukraine and going, wow, we don't have any of that stuff. We don't have any of that stuff. We don't have any of that stuff. So there's huge opportunity. And that's one of the really positive developments for the whole startup ecosystem in defense and dual use.
I'm going to pledge to do a bit of a track on this and have a look at what's happening with dual use, what's happening with defense, as with how many startups are coming through, what the intrigue is, what the raised quantums are, what the value, and see if we can see any patterns of behavior, and I'll report back
Final thing on the European side of things is that per Andrew's point, the European governments have now pledged to basically buy European, right? So actually, funnily enough, if you're an investor in Anduril in theory has had half of its market just cut away from it, right? Because the Europeans won't be buying that technology anymore. So actually, I think it's very interesting for the Europeans because they actually in theory won't be competing against the US tech companies this time.
And the Germans have just set themselves up as the central point of production, if I'm reading between the lines. So let's see how a lot of this unfolds.
The Europeans won't even buy UK stuff at the moment, right? So it's very sovereign driven at the moment.
Theorem's done a fantastic analysis of the sort of resilient sector across Europe, and it's been up 30% across over the last 2 years, even though overall VCs 45% down. So this is something that's already started and is only increasing.
I want to talk about a report from Nicolas Collin, who's the publisher at Drift Signal. He writes a blog there. He's also the co-founder of the family over in Paris somewhere. I think he's somewhere in France. Now, he's written an article called Who Will Be the Japan of the AI Era? And what he's trying to do is trying to draw a parallel between Japan's pioneering role in revolutionizing manufacturing with lean production in the 70s and the 80s and this current transformative potential of AI and reshaping production methods. And I think it's quite a worthy parallel and quite an interesting story. So as AI becomes deeply embedded in society, the key question is who will develop the most advanced AI technologies, but which countries or regions will possess the institutional frameworks and strategic vision to actually bring all this alive. Now, he's suggesting that much like Japan's unexpected rise in manufacturing, the leaders in AI-enabled production will be at the application layer, and the countries that will emerge as the winners, they will only win if they can embed these organizational structures and get it right down at the core level of how they apply AI and how they fully harness the capabilities. So to me, this feels like our opportunity. This feels like Europe's opportunity. We're at this pivotal moment where China, America are fighting on the foundational level. We can harness this application layer. And if governments can get their act together and large orgs and institutions can get their act together, we can really start applying and get Europe back on the map. Can they step up? If so, how can we step up? Where, when? So Lomax, I know you are not in full agreement with Nicolas' thinking here. Where would you take it?
No, I think firstly, I love his writings, although they are very bullish on Europe, which is great. But I think sometimes erroneously so, right? So I just think when I digested this article, which is incredibly complex, I think, and in terms of the analogy it's drawing. And one of the points he was making is that this lean production methodology that was pioneered by Toyota in Japan after the Second World War, in the context of manufacturing, was actually adopted much better in Europe than in the US, because that methodology was predicated on treating your employees well and fostering a culture of sharing. And what they'd said Toyota was you can have a job for life, right? So it encouraged people to kind of be in it together. Whereas in the US, it's a bit more transactional, that people change jobs much more regularly, like they tend to be elbowing each other out of the way, etc. So in Europe, in a way, was better at adopting that. And the sort of symptom of that, or the outcome of that, was that the European automotive industry actually did a much better job of adopting that and became a world leader in a way that the US actually ended up struggling, right? I don't know. It's a long kind of complex point, but I don't think that applies in AI, basically. So that's why I think I don't disagree with him. And I was trying to think about why, and I was like, much as I love the idea of what you just said, Dan, it's like, if you just conclude that AI is better software, right? Let's just start with that as a premise. Even if it's a step change, it's still better software. Like, let's just take Europe versus the US. Like the US, the data is there. Like the US enterprises have been a far quicker adopter of, for example, cloud technology than their counterparts in the EU, right? There is early, but I don't know, I can quote a report by McKinsey that shows that European companies are between 50 and 75% behind their US counterparts in adopting AI. I mean, who knows? That's probably a bit vague, but I kind of can agree with that. So I'm sort of thinking, if you take Nicolas' like philosophy, you'd be like, oh, maybe the European kind of fabric and institutions are going to be better at adopting these tools and more collaborative, and everyone's kind of in it together. I just don't agree with that. If I look at, look at the numbers and the productivity. You look at productivity numbers. I think since 2019, the US productivity per hour per employee has gone up 7%. In Europe, the equivalent figure is 1%. if you look at GDP growth since 2000, the gulf is like staggering, especially if you look at GDP growth, EU versus the US since the global financial crisis. And I think a lot of that is like adoption of the technology. Don't forget, guys, that the US spends 3.5% of GDP on R&D, right? And Europe is maybe half that, just over half that. So adoption of technology, et cetera, et cetera, et cetera. We've already been doing it. We've had an experiment in the last 10, 15 years. So I don't see anything there that suggests that it's going to be any different this time with AI in Europe. Maybe I'm wrong. Call me the doom monger. But I don't see a kind of special reason for distinction the way that Nicola has drawn in his article. I hope, and I know Andrew's going to agree with me. I'd love him to disagree with me, but yeah.
Andrew, where are you going to go?
I'll agree with you that I thought it was a sort of an in-depth piece, which was interesting as a thought experiment. But there's a line in there that really caught my eye, which was what ChatGPT represented wasn't a technological breakthrough, but an interface revolution. And I just don't think that's true. Before there were LLMs before ChatGPT, but nobody had scaled them to the feature set and competency that GPT-3 and then GPT-4 with its reinforcement learning sort of represented in that recycling of that network effect. So I think it's just a fundamentally flawed to suggest somehow that this was just a great interface plugged into sort of run-of-the-mill technology. And I think it underestimates the value in owning the compute, and the technologies and infrastructure around that compute. The processes which were applied from it was the Keiretsu system or whatever, which you could sort of take off-the-shelf robotics and apply the same system of manufacturing. AI is more than just a process. Of course, if you've got access to the AI, it's true that you need to embed this into every facet of society to create the improvements that Lomax has talked about. But you've got to have access to the AI to do that. And you've got to have access to those frontier models and whatever the next generation of technology coming down the tube is. So I think it sort of simplifies a slightly more complex and fast-moving AI landscape versus just a revolution and approach of how to build something, which you can take as a process and a management technique and apply in your own factory. You can't apply AI unless you've got access to the compute. You can't build a model unless you've got access to the processes, and unless you've got access to the software and the technology. So it was a bit flawed from that point of view. Even thinking about the analogy with the PC, the sort of the PC world, everything else, I think the AI stack's just evolving so much faster. And you look at all the different people in different places trying to build these frontier models. In China, you've got Tencent, Alibaba, and Baidu all building frontier models. You've got the US, Europe's hopefully finally waking up to the fact we've got to throw billions at it. So yeah, thought it was pretty flawed, but an interesting article.
I might regret this, but we debated this a lot, and Mads loves talking about this, and he's very got some great insights in this. Is that I think the AI, the sort of LLM level gets commoditized, right? So I think models get commoditized. I think there are, though, two things I didn't mention in my little diatribe was structural problems in Europe, which also cut across what Nicola is saying. Number one is the energy prices, which you talked about here. So even if, computer models get commoditized, you still need to actually power this stuff. And Europe has a major, major, major barrier there. And the second one is this like regulation and red tape and everything. And I feel like that is a major structural barrier to the adoption and this sort of utopia, Dan, that Nicola is talking about, where the EU can suddenly become better at implementing this stuff and being more productive. Can I give maybe one glimmer of hope? We've been talking about software and AI. There is the next level, which is this physical AI, which is the roboticization, which is basically AI touching the physical world, right? And that is a whole kind of next level of disruption and unlocking of like GDP growth potential, etc. Europe might have, if you take what Nicola is saying, might have an opportunity there, because with this slightly more socialist kind of like Keiretsu type integrated supply chains and long-term thinking, and he's basically saying what a lot of the kind of Italian, German Mittelstand has is very similar to Japan that the US hasn't got. You could maybe argue that with physical AI as something in a kind of more factory-based industries, maybe Europe does a better job at integrating for those reasons than in the US. But that is very hypothetical. I don't know, but I'd posit that, and I may regret that in 5 years' time. But
The energy problem will go away. I think there will be new chips
It
that
will.
come
So,
along. There's
really?
going to be new power.
I
I think
do.
it's a temporary, it's a short to medium term problem. The regulatory
I don't
issue,
know,
I think
guys.
you're bang on, Lomax, because if you constrain innovation but early on with too much regulatory burden, you just can't move as fast as other people who don't have that regulatory constraint will. I think you're also bang on with the issue of, like, let's call it physical AI. That will become far more important, far more powerful than LLMs are today. I honestly think the current set of LLMs are a stepping stone, and there are a whole bunch of startups, both in the US and in the UK and in Europe, working on from all different directions on solutions to this physical world AI problem. And for people who haven't thought about it that much, it's the difference between talking to ChatGPT and it understanding what you say through crunching of words and pattern recognition, and ChatGPT being stuck in a robot's brain, walking into a room and saying, "Go and pick up that mug," and it understanding what you mean, and being able to recognize the mug and having all this, the computer vision. And I think there are so many factors to a sort of a walking, talking C3PO that we've got quite a long way to go still. We're getting close, but we've got quite a long way to go. Even with some of the very cool videos you see of, I think it's is it Optimus, the Tesla robot that sort of picks up, does,
And
folds
Boston
clothes.
Dynamics did
Yeah, but my understanding is a lot of those
the last
videos,
Super 6 that was Boston.
yeah, a lot of the videos are really sped up. They're sped up like 5-10 times. It's moving incredibly
Are they?
slowly. So some of that's a compute
Are they?
problem, but some of it is also still just a sort of brain AI, fundamental brain AI
They
problem.
can't slow
And
down those backflips, Andrew. They can't. That would be defying the laws of physics. But who knows? Who knows?
I think energy. Maybe you're right on energy, but I think energy we have a long way to go to get the energy down to the level that you would need to have like mass adoption of AI. I really think that. I think that's a major structural constraint. On the regulation one, I think we're all agreed there. And I think, look at the incentives. I think the bureaucrats in Brussels, they're living in a different world. They're living in a bubble, and churning out new laws every year is almost a KPI for them. I wonder if they get paid based on that. So that is a major problem that we have.
GDPR,
Paid by.
the horrible puppet and the horrible cookie pop-up thing, like that should have been one side of A4. It should have just said, I have the right on any service to press one button and have all my data deleted. That's all it needed to say. All this other stuff about accessing data and everything else, so it doesn't actually serve its purpose. Like, I still can't get these damn companies to delete my data, even with all the GDPR crap. It's so painful. They should have just specified that every single app you have should have one
Maybe
button
they've learned their
I can
lesson.
press.
Hopefully, that was a minor blip. Although it is always, I think, very telling whenever you see any tech or any founder in front of Congress in the States, and the lack of knowledge in government. And I would love to see somebody stood in front of the MPs in the Houses of Parliament and explain whatever technology or this AI or this social media platform or whatever it might be. That would probably be quite telling as well over here. There's one last topic I want to dig into, and it's a behemoth of a topic. We can't not talk about Liberation Day, and I feel like it needs a theme tune and somebody with an orange face to stand behind me and wave his fists in the air. So Liberation Day is I think the full title is America's Economic Liberation Day. So this is all about tariffs. So at the time of recording, the whole tariff debacle has been blowing up the news threads. So I want to talk about what tariffs are, what they mean for Europe, for startups and investing. Now, for context, I didn't realize that tariffs built the USA. There are basically two periods of history, of American history, I guess. The US didn't have any federal income tax until 1913 and ran for over 100 years on import taxes or tariffs. And it feels like part of Trump's rhetoric in this whole MAGA, make America great again, is harking back to, we need to put tariffs back on the table. And he keeps calling them unfair, and people are being mean and doing us down. So tariffs are really, really back on the table. It seriously backfired the last time that they tried to universally apply tariffs, which was in the Great Depression. It was the Smoot-Hawley Tariff Act, and it was a tariff on 20,000 products coming into the US. It failed miserably. It drove the Deep Depression even further and more global. But we're not in a depression, and it should be very, very different now. So I've got loads and loads of stats, facts, thoughts on this. I've done a lot of research into what tariffs are, how they'll affect Europe, startups, and investing. But I'm going to shut up just there and hand over to Lomax, because I could bore everyone to tears with this. But Lomax, where would you take this topic? Because this is going to affect us, isn't it?
At the sort of geopolitical macro level, there is a bunch of stuff to unpack here. But actually, when I was thinking about this in the context of startups, like European startups, I didn't conclude nothing to see here, but I concluded actually the impact of this is, I think it's just heads down and keep building, more or less.
But what about when things, I mean, there are going to be some grey tariffs, right? There's going to be some challenges for startups around digital services and other, when, for example, the EU, if they do retaliate, there will be some challenges with big tech, which will therefore affect European startups. So my sense is there are going to be some knock-on effects.
So one thing is there's a lot of detail here, right? There's a lot of detail to really dig into. Like as far as I concluded so far, and it's confusing this because the landscape changes, is actually for software there are no tariffs, right? So if you're investing in software companies, which most tech companies are in Europe, you can still access your largest, potentially largest market unencumbered by tariffs, right? Which is why I was slightly concluding, not much to see here. If you are investing in or building deep tech companies, which have a hardware component, which, we all do here, and increasingly in Europe, more euros and pounds are being allocated to deep tech companies for some of the reasons we discussed earlier, then those companies will have more of a problem, because if they're not manufacturing in the US, they will have, if they're coming from the EU, as at today's date, a 20% tariff. If they're coming from the UK, a 10% tariff. And, these seems to be things to be changing every week. So I don't know. So I think that is, Andrew and I share an investment in a company that has just used a large Series A war chest to actually set up manufacturing in the US, which they were planning to do anyway ahead of tariffs. But that may be something that these companies need to think about more, especially if the US is going to be a big market for them. There's a bunch of stuff. When I think about it, I'm like, what is Trump doing here? He's trying to do one of two things. Is he trying to fundamentally unpack globalization and take things back to how they were, and onshore and reshore a bunch of manufacturing, supply chains, etc. in the US? Or is he using this as a weapon, basically, to get other countries, negotiating tactics, to get them to reduce the tariffs on US exports? I don't know, because on the first one, the tariffs caused so much damage. Inflation, right? Inflation could be, according to Goldman Sachs, double what it was reported to, projected to be this year. That impacts, inflation is largely a tax on the poor, I would say. And a lot of those people vote for him. So a lot of people are going to be very, very, very unhappy, right? And so in the short term, and the long-term effects of this won't be felt for 10 years. If you're changing your supply chain and moving manufacturing jobs, and also unemployment in the US is, I think, a record low almost, right? So what's he trying to fix with that? So I'm almost more in the camp of he's doing this to try and, cut tariffs imposed on US exports by other countries. But I don't know. But that's a kind of wider point. I think in European startups, I think software, no tariff, no problem. Hardware companies, yeah. But if it's, I don't know. Are you interested to hear what you guys think?
I think there's going to be massive supply chain shocks. I was looking at what goes into a car just for some context, trying to understand how this is going to affect the auto industry, because the largest export chunk is automotive. It's basically Germany, I think. It's about 50 billion. They've got a $240 billion trade deficit, of which about $50 billion of that is automotive. So what goes into a car? There are about 25,000 parts that go into a car. Now, even the built in America, inverted commas, cars are about 50-50 US parts versus international parts. And around 20% of European cars are manufactured in the States. So a BMW X5, for example, German heritage, is built in the States and then shipped to China to circumvent some of these tariffs and charges. So it's so intricate. BMW has 12,000 suppliers across 70 countries. It's, I think, just the supply chain shock of him being such a bully. Forget what the tariffs are, because the UK and Europe has tariffs on American goods and services. So, and we've got VAT, we've got a 20% VAT. I mean, whether you put that in the tariff bucket like he has or not is up for debate, but we've got pretty much a 10% universal tariff on American goods and services. So there is a two-way street here, which is sometimes ignored. And obviously, China has been punished the most. I think their effective tariff is in the 50%, whereas UK's roughly 10%, I think, is a match, and EU is 20%. So I think the biggest thing for me is the supply chain shock. And we've all seen markets take a dip this week. I just don't know, a bit like you, Lomax, I don't know what the end game is here. I would argue it's going to be both, isn't it? It's going to be a little bit of, this retaliatory mode and also as a negotiating tactic.
Yeah, 100%. I think it's a bit of both. There's some stuff where he wants to really reshore some of this build, and some of it is just to bully people to the negotiating table. It's quite fun to look back at what happened previously when he introduced tariffs. I think the washing machine tariff back in 2018, he put in, he put a 20% tariff on the first million washing machines or something, with the idea of protecting domestic manufacturers like Whirlpool from LG and Samsung. What actually happened was the washing machine prices went up by about $80 per washing machine, but also dryers went up because they're priced about the same. So domestic sellers just put the price of both up. That meant that it cost the consumers more, which is why the risk is that there's consumer price inflation. And it didn't actually work out that the domestic job increase helped at all. I think it ended up costing something like $800,000 per domestic job created as a consequence of the domestic increase of washer manufacturers. So it's all a bit broken with these tariffs. All these secondary consequences that you're not sure, or perhaps you don't predict when you introduce a tariff. The EU and UK opportunity has to surely be to do deals with some of these countries worst affected by these tariffs. If you want to sell more cars to MENA or to Africa, then go and do a great tariff, deal with the EU and the UK should go and do a great tariff deal with these other third-party countries and just work around the United States. I don't know if they will move quick enough to do that, whether Europe will move quick enough to do that, or have the sort of gumption to do it, because it risks the wrath of America. But you know what they say about a bully: whenever you placate a bully, he just carries on bullying. So I'm sort of the view that you have to kind of meet fire with fire to some degree.
There's going to be some trade agreements. I fear that a lot of the Chinese stuff that was going stateside will end up in Europe, and I don't know what that means. I mean, I do know that American GDP is around 70% consumer spend, and in Europe it's about 50%, and in the UK I think last track it was about 59%. So if your economy is so fueled by consumer spending, then I can see why Trump wants, more of that spending being circulated within his own pot. I understand it. But I also think that makes it extremely fragile. And again, coming back to this, the whole intricacies of these supply chains, I can't see how everybody just doesn't bloody lose with this. It just feels like it's a sledgehammer, but actually there's this intricate little weave of under the radar web of connections between suppliers and consumers. It's just going to be an unholy mess. But Lomax, what else did you want to say?
I'm just going to say, I don't think we, as in the context of European startups, I don't think this is going to make a lot of difference. The biggest thing that I worry about is the inflation leads to higher interest rates, which makes it harder for me and you and Andrew to raise money, which means that we have less money to put into startups. That's the only thing I can really think of. But I think there's a safety
digital services tax. I think EU is going to go back with the digital services tax, which will affect American supply. I think there's going to be some retaliatory regulations and other kind of tariff-driven kind of grey import tariff issues. I think that will affect startups.
I think there's a safety break here, though, guys. Right, which is we've alluded to, is that if we, per Andrew's washing machine example, if inflation ticks up in the short term off the back of this, Trump's got to react to that pretty damn quickly, because you're going to have tens of millions, if not over 100 million people in the US very, very, very upset about this. And I think that will ultimately act as a check on Trump's actions here. I think that will really kind of hold him to account in the short term from, doing anything too egregious and or starting to roll these back.
Isn't the shock already out there? Isn't the fact that he's a loose cannon and a bully? Isn't that the problem? Isn't the fact that we just don't know what he's going to do next? Will he go, oh, it's okay, it was just a negotiating tactic, and because he didn't mention Canada and Mexico in this latest Liberation Day talk. Was like, have they been doing deals? Has something else been going on? Because they were the first out of out of the gate to be tariffed. So what happened with those two? So, and they're the US's biggest trading partners. So, and a lot of European cars get built in Mexico to then get shipped into the States. So this whole thing is so circular. I'm fearful that it's the shock of the conversation and the shock of the bully that is the problem, rather than the reality of how the world then rebalances after the fact, because that's just going to take years to untangle.
This must be a nightmare if you're a big conglomerate selling into the States, selling products into the States, because you don't know, it takes 5-6 years to plan your supply chain, if not longer, right? So you have no ability to make long-term planning. Luckily for all of us investing in startups, they are a little bit more, nimble and dexterous. So I think in a way, they aren't so buffeted by this in the short term.
But they are also clients. There are startups clients are the ones that are going to have these economic shocks that mean that maybe they're not going to be so open to buying these new products and services from the startups that we invest in. And the investment
There's probably some
landscape is going to shift.
There's probably definitely some startup opportunity here, around fixing the uncertainty from tariffs and all that kind of stuff. I'm sure there's a lot of like interesting, very specific, but yeah.
My take is there's going to be some very rapid free trade agreements coming to pass. There's going to be an accelerated interest into Europe trade, and possibly with China and possibly with other territories. So my sense is there's going to be an emotional overhang with all of this too, because people, I think, forget, even post-Brexit, all these years later, the European attitude to the UK has quite rightly been, well, you've made your bed, you're going to lie in it, on a lot of these business aspects. And I do think that attitude is going to be the same directed at Trump, even past his, let's assume he doesn't get his way and stay for a third term. I think this is going to be almost like a decade-long challenge of this is going to shock and reverberate, which I hope will create more European connectivity and more interconnected thinking around startups, investing, building businesses and doing.
Rather than sort of cry over spilt milk of what he's doing, we need to focus on opportunity. Like, what can we do? What's our chess move to take advantage of what he's doing? We get so wrapped up in what's going to happen to the US domestic economy. What's going to happen to us? Let's get radical. Let's think about what we can do. Volatility creates opportunity.
Yep.
And it's far easier to come up with step changes in growth or capture a market when your competitor is being erratic than it is if everything at the status quo is the same every day. So America's making a lot of big decisions. I don't think all the consequences are predictable, and we should plow ahead and make hay while the sun shines.
No, I think that's a very elegant and optimistic end. I would say the Trump advance actions in the last 3 months have reminded everyone, or the takeaway from that is that the US is no longer as reliable a partner as it was in the past. And we've talked about it earlier, kind of necessitates countries to be a little bit more inward looking and build more self-sufficiency and resilience. That's great. That throws up opportunities. It throws up investment. But we're talking about the biggest economy in the world. So ultimately, we are still going to want to, trade, do business with, sell into. I certainly will be encouraging my founders to continue selling into the US market, et cetera, et cetera, et cetera. So I think, the US is still the go-to place.
Hopefully this means that this is going to be USA plus. So still, yep, sure. We know that there's 50 cents in the dollar is spent by US companies on software, as an example. Yep, we're going to sell to them. But we're also going to open up Europe, and we're also going to focus elsewhere, which I think is not a bad lesson to take. So I'm up for that. Gentlemen, it's been a gift and a pleasure. I will catch you all next week.
The biggest unanswered question is, where is the money?